Hey there, it's Thomas Frank. Today, let's dive into a hot topic, the US-China trade war of 2025. Are we teetering on the brink of economic collapse? Let's break it down. First off, let's talk tariffs. Tariffs between the US and China have skyrocketed, with Trump slapping a 20% increase on Chinese goods and China retaliating with up to 15% on American farm exports. These escalating tariffs are driving up costs for businesses and consumers alike, potentially fueling inflation. If inflation sticks around, it might erode purchasing power and slow economic growth. Central banks could step in, but aggressive rate hikes risk stagflation. Not good news. Next up, supply chain disruptions. The ongoing decoupling between the US and China might fragment global supply chains, especially in tech and manufacturing. This could lead to inefficiencies and higher production costs. Firms might diversify suppliers to adapt, but this comes at the cost of long-term efficiency. Now on to technological fragmentation. We're seeing a bifurcated tech ecosystem with the US and China going head-to-head. This tech war could stifle innovation, increase costs, and slow global digital growth. Semiconductors and 5G are the key battlegrounds here. Then, there's global economic fragmentation. Competing trade blocs like US-aligned versus China-aligned ones might reduce global trade efficiency. This disproportionately affects smaller economies that depend on both superpowers. Not a good look. Investment and market confidence are also taking a hit. Prolonged trade tensions might deter investment, trigger stock market volatility, and cause capital flight from emerging markets. Government stimulus or trade truces could help stabilize things, but that's contingent on political will. Speaking of politics, leadership choices in the US and China will shape escalation risks. Diplomatic engagement could mitigate conflict, but hardline postures might make things worse. It's a delicate balance. Now let's talk about systemic vulnerabilities. High debt levels in both countries are a ticking time bomb. A trade-induced slowdown could trigger defaults or fiscal crises. Geopolitical spillover, like military incidents in Taiwan or the South China Sea, could escalate beyond trade and disrupt global markets. Historical context is key here. Past economic collapses like the 1930s and 2008 required multiple triggers. While trade tensions alone aren't enough, they could combine with other shocks, think banking crises or climate events, to cause serious trouble. Finally, global interdependence plays a crucial role. Third-party roles like the EU and ASEAN might buffer impacts by mediating or absorbing trade shifts. But if multilateralism breaks down, like the WTO failing, things could get worse. So what's the verdict? While the US-China trade war in 2025 is unlikely to cause an economic collapse on its own, it poses substantial risks of severe recession, stagflation, and prolonged stagnation. A collapse scenario would need multiple factors: unchecked escalation, policy missteps, debt crises, and geopolitical shocks. Prudent policymaking, diversification strategies, and international cooperation are critical to mitigating these risks. The more probable outcome, a challenging economic environment with slower growth and heightened volatility, rather than outright collapse. Thanks for tuning in. Don't forget to like and subscribe for more insights. Catch you next time.